Welcome everyone to the Enigma. This is a trading system that has taken me over 3 years to create. Um, and I'm going to take you guys through a journey. First of all, I want you guys to understand that I created this system for not just for myself. I'm very sure that in the process of creating this system, I knew very well that I wasn't just going to be the only one who was going to use it to make money. I knew that I was creating something not just for myself, but something for everybody, for something everyone else can enjoy. And I hope that at the end of this call, you'll be able to see why. So the name of the system is the Enigma, and let's go into it. So the Enigma is a trading methodology used to read and decipher the market's price action on a chart. So you guys, I'm pretty sure you already read this. So I don't have to reread it for you. Um, I'm going to be so plain and also try and make it simple with you guys. Because if you haven't read it, you can send me a message on IG or whatever. Anyhow, you can find me. Just send me a message and I'm going to send you a copy of this. So the Enigma is a trading system that's used to read price action. And I think the key word here is actually decipher the market's price action because and this is not me coming here to tell you that um, I am this is the holy grail or whatever, or I am the one that knows all or know everything or whatever. No, I am going to show you from my perspective, and I hope that you can see things from my perspective. I'm very sure that if I show it to you and you pay attention, you'll be able to see things from my perspective. And I believe by seeing things from my perspective, it would make a lot of sense for you. It will make a lot of sense to you. Um, so I'll try to show my perspective. And the Enigma is something that I use a lot, and I've been using it for over 4 years, almost 4 years now, actually. And I would say I'm at a place where I've found consistency using it. And it didn't take me just a short amount of time, of course, because I'm the one that created it. I had to go through a lot of failures. I had to go through a lot of moments of regret to be able to learn how powerful the system was. I had to also have some amazing wins as well that also showcased the ability of the system, and I'm also grateful to know I've gone through that journey of coming to create it alone. I had people around me, I had my community around me, and I was able to share everything I was learning and as I was refining the system onto a point where I felt like, okay, the system is now complete. Of course, I call it the version 1.0 because, we learn every day and I know that I'm going to keep learning deeper about it and I'm going to keep learning more about it. And that's why, of course, there's going to be another version coming out, but it's not going to change the elements. It's not going to change the foundation of the system. It's going to change anything about the Enigma. So the Enigma has three foundations. But first, let's understand how do you decipher the market price action or information. So the Enigma, the person, which is me, I look at the chart nakedly. And I use a specific time frame to begin to look at the time frame. So I use naked charts. Now, let me bring up a chart because I'm sure so many of you saw this picture and you probably tried it. I've even spoken about it in so many places and so many cases. So for the very first time, you're going to hear me say that I use a special time frame in the Enigma. And the time frame used is the 20-hour time frame. To gain access to the 20-hour time frame, it is not available on the free trading view. I think you have to upgrade your trading view to be able to have these intervals. I'm pretty sure professionals, everyone here is a professional, so you guys already know that. Um, so yeah, the main this is like my key foundation and how I look at gold especially, but also it works on every other pair. or the accuracy, and the accuracy is top notch from gold, I would say. And I understand gold better than anything else anyway. So I use the 20-hour time frame to decipher the beginning and the end. So what A to B is A is the beginning and B is the end. So my perspective, out of everything I've learned in trading, I come to realize that price always has a beginning and an end in a specific directional movement. So if price is going to go down, it's going to have a beginning and an end. If price is going to go up, that movement will definitely have a beginning and an end. So it struck me, and I said, if price is, so let me draw it for you so you understand. So if price is going to go up, all right, price definitely has a beginning and an end. This is the beginning and the end, beginning and the end, and the beginning and the end. So the truth of the matter is, in my perspective, that the beginning and the end happens for a reason. They don't happen just on vibes, if you get me. They happen specifically for some specific reasons based on the elements of the enigma, of course, and you're going to be able to see that. So the beginning and the end, every movement going up or down must have a beginning and end, and that's how A to B came up into play. So A is the directional movement of the trend. That is, if you're in a bearish marketplace, or if you have a bearish structure movement, for example, right? And the typical, you guys will call it lower highs, lower lows, whatever. So the ones moving continuously to the direction is A, because why? It's the beginning. So of course, it's a no-brainer to say A is the beginning and B is the end. So this is where the move ended, and this is where the move began again, and this is where the move ended, call it B, and this is where the move began again, call it A. All right, and you keep on seeing it until it changes. It changes, and call that intent. All right, so your normal break of structure, I just call it intent, right, from my perspective, because to me, the reason for the name intent is because it is literal in the sense that when demand, when a reaction to demand gives me intention, then it simply means that demand is ready to be controlled upwards, that price is ready to buy. And so because of intention, I have that confidence. Intention is key because without intention, there's no confidence, there's no assurance. Instead, there's fear, there's doubt, there's uncertainty, and eventually you find yourself in regret or losses. So let me clean this out. So A to B, the directional movement, as you already know. So I can go back to Enigma. All right. So price utilizes both a range and an impulse. Now this is very, very key because I'm only just drawing lines. So now we'll go into price action. We'll go into charts. And with charts comes candlesticks. So price utilizes both a range and an impulse to move either up or down. Let's take a look at an example of price action, this time showing an upward trend. So, sorry, I did that too quick. Okay, so this movement shows a downward trend. This movement shows an upward trend. Now, in the first picture, I'm able to showcase to you that everything in the chart is either a range or an impulsive movement. This time, I'm utilizing the 23-hour time frame. And it also goes to show you how the 23-hour time frame makes ranges, especially the unmitigated ones, especially the ones that are meant for control supply, control demand, forget soon, are always alone. They are always very visible. They are not hidden. They're so obvious to find. So it's like it just takes away all the noise. In the daily, you wouldn't see it as clean as this. But in the 20-hour time frame, it is so clean that you don't have to overthink. So you see the ranges very, very clean. You see the impulses very, very clean. It is so obvious. It's black and blue. It's black and white rather. You can see, you can differentiate what's a range or an impulsive movement on the 20-hour time frame than you would on the daily or the weekly or the monthly. So you have a range, you have an impulse. You have a range on the big picture, you have an impulse. And even inside this big range, you have, so look at, you can see my cursor, right? So you have an impulse, you have a range. You have an impulse, you have a range. You have an impulse, you have a range. Impulse, range, impulse, range. Range, 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 impulse. So there's all ranges and impulses on the 20-hour time frames, and they're so easy to look at. And so all I do is from the beginning of the trend to the end of the trend, I mark out all the ranges. Now, you see, I've done the same to the bullish move. From the beginning of the trend to the end of the trend, I mark out all the ranges, and you can see the impulses are also simplified. Range, impulse, range, impulse, range, impulse, range, impulse, range, impulse. And that's how they do it to get to the end. Because obviously you have Wyckoff people would say, oh, it's an accumulation, another reaccumulation, another reaccumulation, 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 or maybe they say distribution and then redistribution, blah, blah, blah. You know, this is just to showcase to you that this is how price moves from the beginning to the end. Price doesn't do anything else, especially when you come to the 20-hour time frame. In fact, on all time frames, it's not just 20-hour time frame, even in the 1 minute. For price to go from beginning to the end, either up or down, it starts with range, impulse, range, impulse, range, impulse. So the beauty of the Enigma is, and especially using the 20-hour time frame, is with the fact that it now starts to distinguish and showcase to you all of the noise and all of the truth. So let's go to the next page. So the Enigma comprises of 3 different elements. Number 1 element of the Enigma is structure. Structure is the king, or maybe will I say the queen. But structure is the number 1 element that comprises the Enigma. So structure in this case, you know it as the A to B movement or the beginning and the end. But I've come up with something that can make the way we identify structure so easy, so simple, and you don't have to overthink. So structure is identified as BAB. BAB is used to note pivot highs and lows based on the direction of market trends in a time frame. So here are sketched out examples of how structure is used to identify market trends. So you have a picture here. There's a line graph. It's not a chart movement, but just a line graph. And I'm going to show you chart movements. So in a line graph here, you can vividly see how I've been able to say, okay, this is the end, the beginning, and the end. When the moment you put price in a BAB formation, you have unlocked the first step into the Enigma. And I kid you not, but the moment your BAB is wrong, everything else that you would do would end up in a loss. I'm not even sure if you would be lucky. Everything you would do will end up in a loss because you have already entered with the wrong formation. It's like building a house and you don't have a balanced, rock solid foundation. The house is going to fall at one point, and you don't want to have that. So you want to have something that's strong, because if you do have something solid, then you're going to find yourself in a very, very good trade, in the best trade, basically. So to have the formation BAB is very important. In fact, it is the first most important step to the Enigma. The moment you have it wrong, everything else is going to be wrong. So let me show you chart examples. By the way, are we understanding everything I'm saying so far? Is it making sense? Can I see your comments in the chat box to show that we're following? Okay. So I'm going to show you random examples of the beginning and the end of structure. And this is, so I should explain A to B movement. Okay. Don't worry, you see it when I do it now, actually. So I'm going to use random movements. So this is 20-hour time frame. I'm going to show you how it will be moved. So let's start from this high. You can vividly see it's a no-brainer that at one point that was the end of price movement to the upside, right? Until price started to change. And with that, you're going to see the A to B movement. So high, low. It ended here. It continued here. We broke out of that low. We made a new low. Made a new high. Right? Are you seeing it? Made a new low. Made a new high. These are A to B movements, literally. You have a beginning. I can say this is B because, we're bullish at the point. And then we came to A, saying, okay, let's buy again and continue that bullish move. Then the bullish move fails, intent. And then you now know that, okay, because of the intent, price has changed and price is now bearish. And so what happens next? Price starts to trade A to B formation, A to B formation based on that intent and direction of the trend. So structure is key, as we can see. And we move on to the second element. The BAB formation. Okay, so let me actually use the BAB formation to show you using this thing I explained here. So clean this. So we got intent here. The intention that price has now switched to bearish perspective. So therefore, this is A and this is B. And the B is only formed. So if we say, okay, let's look at all the ranges. This is the very first range to start the bearish formation. It's the second range because I can see price came back up, maybe took order flow, something in there. Then we continued. This is another bearish formation to continue selling off. So we have one range, second range, third range, and then we have another range. As you can see, all the ranges I picked produced momentum. All the ranges I picked produced momentum to the direction of A. Okay, I'm not picking just any range. I'm picking the ranges that produced the direction as A is going to be. Simple. I'm trying to show you how did A create the next range, and impulse, the next range and impulse from A. So I'm finding out range 1, range 2, range 3, range 4 until we get to B. The reason you're going to find out. Is that clear? Okay, just so you don't know I'm not doing anything random. So we have the next range here, and then we have another range here. Now, this range stopped producing bearish impulse. Instead, we start to see this range producing bullish impulse. And then something is very vital. I notice at first hand that price has broken, that demand has broken supply. So this to me is telling me that price has ended. That's intent right there. The intention that control demand has broken control supply. Price is creating range to go down, range to go down, range to go down, range to go down. All of a sudden, it starts creating an opposite range with a bullish impulse to break this range. That is an intention, and that is how to tell that B has been created, just as you already know that A has been created. And how did you know that? With the intent of demand break supply and with the intent of the new structural pattern. That way, we're able to signify B, A, B. It is as simple as it is. Does that make sense? If you want to do it and find the right thing, all right? Because you can be so wrong, and the moment you are wrong with your BAB, everything else can be wrong. Does that make sense? Any questions about this? Do you have any questions about this before I move on? Okay.
Yes, I do.
Okay, so can I hear a question?
Good morning, sir.
Come on.
From what you explained just now, from the intent before it occurred, after it broke that range that led to the impulse, the last range that led to the impulse. I did
Anyway,
not get that.
okay, you did not
part
get to
clearly.
part. Okay.
Yes.
Okay, no problem.
Thank you, sir.
There's a question here. Please, can you show this A and B in another time frame? Okay. We have two control supply from B to A. I don't understand what that means. Anyway, don't worry. I'll do it again. So, like I said, the very first step which is actually very crucial, is making sure that you can find the right A to B, is to making sure that you select the right A to B. Okay. So I said, how do you select the right A to B? So I started with this perspective here because the thing is, you never always get the same perspective all the time. Every time, different perspective, but the logic will always remain the same. Okay. So the perspective here is that I started off with saying that if I'm to read the price action here, this time frame, I can tell you that okay, we're going up and we ended here. Now, when we ended there, we created another low, which is major because it's created. I can see ranges creating impulses, just like I can see ranges creating impulses. So I know that those are begin and end formations. Okay. Now, if that's A to B, right, and I'm looking for the next trade, of course, and I start to say, oh, I want to buy because it's A, and then I lose all of a sudden. That is intent. That's the intention that okay, you know what, the price has just changed formation, and that now tells me that this is now the new A and the new B. And I said, okay, I'm now watching. Since I have intent here, all right, what I need next is I need B because the moment I have B, then I have my trade formation. I now know that, okay, this is the beginning and the end. Every trader needs to know, every trader needs the beginning and the end formation before they can actually have a successful trade. Without A and B formed, you can't have consistency in whatever. I don't even care. I don't care whatever. It's not this in this case, this is not even about the enigma anymore. It's about everybody's trading. You're not going to find consistency in trying to trade the trend, which of course that's the better thing you can do, because that's where the more money is. If you are going to trade the trend and you want to make the most money in the long term, everybody needs A and B to be formed before they can actually have a correct trade. Because without that being formed just yet, everything you would do would be wrong. Because the market, even the I don't know, whoever is the ultimate god in moving the market also needs the A and B before they can even do anything. And you guys will start, you're going to see soon, especially if you start to go down this rabbit hole before you find the light. Because I don't expect you to know it in this call. You're gonna have so many questions. But these questions are only going to be answered at the moment you start to practice. At the moment you start to follow me as well, and you start to follow my footsteps. I start to pay attention to details, and it's going to take you so much time, you know. So there's definitely light at the end of the tunnel, especially if you are going to be dedicated to using the Enigma, because of course you're not just on this call if you're not interested in knowing what the Enigma is about. So it means that you're going to want to use it. So if you want to use it, you have to be dedicated to it, and in that dedication, you're going to have all your answers answered to you. I don't even need to say too much. Okay. Yeah, I don't even say too much, to be honest. I'm just going to continue. So the edge of structure is that the intent is the identifier of the change in trend. And the intent is something that's very, very, like I said, is one of the key things that you need to know if A and B has actually been formed or if the market is about to change the trend. So control supply and control demand is the second element of the enigma. And how I use this, if you remember what I was doing earlier was I was trying to show you guys the beginning and end of every range and impulse from A to B. Everything you have on time frame to another time frame is a range and an impulse, just as you've seen here. Now, there are two variables of control supply or control demand. Like I said, you can have so many ranges. There are so many ranges from A to B, but it doesn't mean that, oh, all those ranges are supply and demand. There are specific supply and demand zones that are responsible for controlling the continuation of the trend or responsible for breaking the trend. And these zones, I call them the V1 and the V2. The V1 is the range or base that starts the trend. So if we say, oh, A has started the movement, then A is the V1 in essence, just like you have it right here. So you have a control supply here. So you have BAB formation. And with the BAB formation, you now have the V1 and the V2. the BAB formation comes first before you start to look for the V1 and the V2. Without the BAB formation, you are just going to be doing rubbish. So the V1 is the first range that starts at A, and the V2 is the second range that breaks the B. As you can see it here, it is as exactly as it is here. This is the exact logic everywhere, and even on all time frames, but mainly the higher time frame. The V1 and V2 remains the same everywhere, every day, and every time. They apply the same logic. So it is the exact same thing. This formation is the exact same formation you will see every time when you want to look for a trade opportunity. So you're either going to get a trade opportunity from the V2, which is the range responsible for breaking B, or you're going to get a range opportunity from the V1, which is the range responsible for starting and creating the trend, which is the one at A. So it also, the V1 and V2 just goes to show you that the very first range responsible for creating the trend is important. And the very second range responsible for breaking the trend, all right, which is the B, is also important. So these two zones can be seen as controlled supply and controlled demand zones responsible for literally controlling a buy or sell opportunity towards the objective. So the objective of A is to break B. So if you have a trade opportunity from A, the objective is that your TP would be at B, because the objective of A, which is the continuation of the trend, is to always break B. And if you have, so yeah, that's it. So I have two playbooks which I use. And the playbooks, of course, this is just a marked up chart, but I'm also going to show you using chart example as well. Of course, if you follow on my journey as well, you're going to see me use this over time. Also, the last trade I used this January, which I put out to everybody in the Signal channel for free, was the exact same, using the exact same playbook. I used nothing else. And I'm also going to show you guys in the next session, because this call is about to time out anytime soon. And it's going to be the exact same link. So I'm just going to start again. I'm just going to start the call again. So just go and click on the same link and you continue from where I stopped. What I want to show you guys next is I want to show you how I use this playbook for catching the highs and lows of the month, weeks, and days. This exact thing, nothing different. This exact thing, like I said. And like I said, this is the same thing I used to catch the sell opportunity in January. And that's how I was able to make money. And I'm going to show you how did I use it. So you guys can log off and log back on, and I'll show it to you. Okay. Thank you.